The top performing investor of this past year wasn't Warren Buffett or Ray Dalio. In fact, Warren Buffett doesn't even make the top 10 list of the real geniuses of investing in the stock market, US Congress. So in this video, we'll be going through the top 5 stocks that US Congress is buying now, starting with some interesting trades by junior members and working our way up to a congressman who made a 122% return on tens of millions of dollars in the stock market this past year. So starting with our smallest trader of the bunch, Marjorie Taylor Greene. Greene has done very well for herself in her short period in Congress, managing to amass a net worth of over $22 million and trading over $3.5 million worth of stocks. She's a pretty well-known MAGA figure, and her recent investment has been in Applied Materials, ticker symbol AMAT. So let's see why Greene has been buying up this material science stock. So Applied Materials isn't a super well-known company, but it's actually a lot bigger than you might think. The company's stock is now worth over $170 billion, and if we zoom out to the last year, they've increased in value by 35% during that time. Pretty decent. So this company works on the fundamental science that later feeds into semiconductor companies like an Intel or an NVIDIA. Their job is to work on the next generation of science that will power smaller and smarter chips of the future. So one of the big theses for investing in a company like this would be the expectation that the demand for semiconductors is only going to continue to rise. And because that demand is currently hitting companies like NVIDIA, which has seen its stock price absolutely explode, as that demand continues for another 5 to 10 years, that demand could start to affect these more fundamental science companies like Applied Materials as well. If we look at the company's earnings, they made $6.5 billion in revenue, but it's not really growing very much. It's not a growth stock. The overall growth is flat, but they are becoming more efficient, with more of that revenue dropping to the bottom line as net income, up 9.33% in the most recent quarter. So I think there are two potentially good reasons for investing in this stock. The first comes from comparing their valuation compared to their competitors in the industry. So if we look at this company's valuation, we can see that their PE ratio is 22.1, which is relatively high for the overall stock market, but compared to their industry of semiconductors and semiconductor equipment, they're actually one of the cheaper companies out of the 73 companies we're measuring. On top of that, the company has also recently announced a cash dividend, which is usually an indicator that the company is starting to become more mature and a lot more stable than a lot of tech companies tend to be. So in the short term, valuation and dividend might be enough to raise the stock price, but let's look at the longer term. When we look at the company's most recent earnings call transcript, there was this quote by the CEO that jumped out. Material science and materials engineering are increasingly important to the industry's roadmap. And as we see new trends like AI causing increased demand for semiconductors, key inflection points like that underpin the semiconductor roadmap are enabled by Applied Materials, especially as next generation chip technologies move into high volume production. So the way I see it, this is basically a bet that the current AI wave will continue for another 10 plus years, and Applied Materials will be a big beneficiary of that. On top of that, it's a very political space kind of inherently in semiconductors, with Applied Materials specifically calling out how some of the US's trade rules actually restricted more than 10% of the Chinese market during that period. So overall, this company looks pretty healthy. They have pretty good cash flow and they're relatively cheap. The only question is there real upside in the short term, or do we need to wait for another 10 years to get a good return? Marjorie Taylor Greene seems to think so, but even though she's in government, she's not directly responsible for the types of laws that are controlling sort of the semiconductor industry, so she may just be making this as a bet. But also, Marjorie Taylor Greene only got an 18% return in the market last year, possibly because she did more buying than selling. But this next congressman is one of the biggest stock traders in Congress, and he has been making some serious money off of his trades in the last few years. Congressman Josh Gottheimer has an estimated net worth of over $45 million, and this guy has traded over $250 million worth of stocks during his time in Congress. His most famous trade is probably when he sold Silicon Valley Bank the day before the FDIC had to take over that bank. Pretty good timing. But to add on to that, this was 2 years after he had been appointed to the House Financial Services Committee, which makes the timing a little bit more suspicious, especially when after that, he tweeted out himself questioning federal banking regulators over their failure to properly oversee Silicon Valley Bank. So this guy's had a ton of success in financial stocks in the past, but recently he's been taking more of an interest in IT stocks. Oh, and by the way, I'll show you a list of the top 10 most traded stocks across all of Congress at the end of the video because it's a pretty interesting list. So back to the Oracle of New Jersey here, we have his latest stock pick. Apple. So Apple is a massive company, and it's about as blue chip as you can get. So when you're investing in a company like this that has a market cap of over $3 trillion, but has still managed to give some investors some incredible returns with a 300% rise over the last 5 years, the way you get outsized returns in a company like this is to identify something that the market is either overvaluing or undervaluing about the stock. So one of the big issues right now in Congress is around consumer privacy. Every company seems like they're hoovering up more and more consumer data and using that to sell more targeted ads to us. But Apple is really trying to position themselves as the exception to this rule. Recently, Apple announced Apple Intelligence, which, first of all, only Apple would want to redefine AI to include Apple in the title. But name aside, Apple Intelligence is their view of what an AI integrated tool looks like. I think we're starting to realize more and more that AI is not its own product. It really works better as a tool that supports an existing product, and Apple has one of the biggest product ecosystems in the world. So what made Apple Intelligence unique when I saw their product announcement was how they were rolling it out with two main pieces. The first level of Apple Intelligence just runs directly on your device. It allows you to do stuff like navigating your phone more easily, pulling up contact, creating a calendar invite. The second level is if you ask it a question that it can't just answer using what's already on your phone, it will ask you if it can use ChatGPT to answer it for you. This is crazy because one, they managed to get an agreement with ChatGPT despite Microsoft owning a whole bunch of that company already and being a big competitor to Apple. And two, because of how it guarantees the user's privacy. They can do most of their AI work directly on device without sending any of that data off to OpenAI. And then only if they choose to, they can access that higher powered AI as well. This reminds me a lot about how Windows tried to implement a very similar feature, Windows AI, which would basically take screenshots of your desktop every couple seconds so that you could search back through everything you've worked on before. But a lot of consumers didn't really want that, and they felt like it was a privacy violation. So Apple, even though they're new to this market, has perfectly nailed the balance between privacy and capabilities. And I think that's one of the reasons that they are one of the biggest companies in the world. So the company obviously commands a bit of a premium valuation, but we know they have an incredibly strong brand, and whatever the tech future holds, whether it be focused on AI or something else entirely, it seems like Apple is perfectly positioned to take advantage of that next future tech trend. Now, Josh Gottheimer has done great in the markets, consistently beating the S&P 500 with a healthy 25.4% return last year. But this next congressman got nearly double that return. Markwayne Mullin has an estimated net worth of over $60 million. But he's a more recent trader in Congress, only trading $8.14 million in stocks recently. But when we look at this guy's history, he might have even luckier timing than Josh does with some of the trades in the market. So he bought between $15,000 and $50,000 in Raytheon stock back on September 13th, 2023. That same month, Raytheon was awarded more than $1.75 billion in defense contracts. And that timing raised a couple eyebrows. Now, to be fair, Raytheon is a really big company and they're kind of always signing contracts with the US government, but Mullin also sits on the Armed Services Committee. So you can see why some people call this out as a potential conflict of interest. But let's just see what stocks he's buying now. So Mullin has mainly been loading up on municipal bonds from his home state of Oklahoma, but a lot of his recent stock purchases have gone to a company called CyberArk Software. This is a relatively small cybersecurity company, but it's growing pretty quickly. So CyberArk is a security and access management company. If we were to compare them to a company like CrowdStrike, for example, CyberArk isn't focused on stopping the bad guys or pursuing attackers. Instead, their job is more around building the fortifications that keep the bad guys out in the first place while allowing the good guys to do whatever they need to do without getting in their way. The company's stock price has done very well over the past year, up 55%, but the stock price has also been very volatile during that period, which makes sense considering this is only around a $10 billion market cap company. So I pulled up the numbers on this stock, and it looks like overall their risk of bankruptcy is fairly low. Their financials are in a pretty good spot, but the company is also not yet producing a consistent profit, which is pretty par for the course for a small software company like this. As an investor, you kind of want them investing more in growth at this phase, because otherwise a competitor who does invest in growth will just grow past them and push them out of the market. At least that's how growth investors usually think about a stock. But when we look at this company's earnings, revenues. Last year, they grew their revenue 23% year over year, which is fine. But when we compare that to a company like CrowdStrike, which is 4 times their size, CrowdStrike was actually growing faster. So why then might Mullin be investing in this particular cybersecurity stock? Well, one reason could be that this stock seems to be accelerating. If we look at their revenue growth, it was 23% back in June of 2023, then 25% growth, then 32% growth, then 37% growth in their most recent quarter. All of that while producing a ton of free cash flow for the first time in their business. So Mullin may be betting on this stock gaining momentum going into 2025 and 2026, which is a period when we would expect cloud spending on companies like CyberArk to pick back up. And this is a theme that we've seen consistently in cyber companies ranging from Zscaler's earnings calls to CrowdStrike's. The other big benefit with this stock is they have really strong annual recurring revenue of $811 million, which is up 34% year over year. So annual recurring revenue is a really valuable thing to have in the business, especially if you want it to grow quickly. So let's compare CyberArk to a company that sells French fries. Well, if a French fry company sells $1 billion worth of fries and they want to grow 34% next year, they have to sell $1.34 billion worth of fries next year. But with CyberArk, if they sold $1 billion in annual recurring revenue this year, in order to grow 34%, they only have to sell $340 million next year, and that $1 billion just rolls over automatically. This is why ARR is such a valuable metric for a company to have, especially if the company wants to grow quickly. And I also liked this quote from the CEO. In a world of constantly escalating threats, we have been relentlessly focused on the security-first mindset. And if there's one thing that we as investors know, we will never need less security than we do today. This is a market that is growing incredibly quickly, and CyberArk is attempting to ride that trend. And Congressman Mullin, at least, seems to think that they'll be able to do that. But up until now, we've been talking about the small fries. Now we're going to move on to the real whales in Congress. These next traders aren't trading $8 million in stocks. We're talking traders who are trading $100 million in stocks as we shoot our way up the list to Nancy Pelosi with her incredible 65.5% return last year, which is high, but still only around half the return of the next congressman we'll get to. So Nancy Pelosi is one of the most influential figures in Congress, and her husband are famous for their stock trades. So Nancy Pelosi's husband, Paul, owns a pretty big investment fund, and I mean big. So one example of one of his trades, in 2020, he bought $1 million worth of Tesla options. And then the very next month, President Biden signed an executive order to replace the entire federal automobile fleet with electric cars. Let's see another example. In 2022, Pelosi sold his shares in Nvidia at a loss to avoid any appearance of impropriety due to Nancy Pelosi's close involvement with the CHIPS Act. This might be due to a lot of political pressure Nancy Pelosi was getting due to the success of some of their past trades. Only after selling Nvidia in 2022, in November 2023, her husband bought $2 million worth of Nvidia options. And within a month, the US said that Nvidia could actually start selling chips to China as long as they met certain restrictions. The Pelosis have made millions trading stocks, and Nancy Pelosi has generally opposed restricting stock trading for Congresspeople, saying this is a free market. So we can't say why the Pelosis are so successful with their stock trades, but we can see what they're buying now. So considering the Pelosi's history with the geopolitics of semiconductors, it's fitting that she's recently picked up over $1 million in options for Broadcom, ticker symbol AVGO. So Congress actually reports these trades in ranges, so based on the strike price for these options, it's actually $1.6 million worth of Broadcom. So Broadcom's stock price is up 67% in the past year, and let's see why the Pelosis are buying this stock. Broadcom is actually the 5th largest company in the NASDAQ, and even though many people may not have heard of them, their products are everywhere. Broadcom is a semiconductor company, but that's oversimplifying what they do. This is a company that owns the entire stack that any software company would need to run. So here's an illustration I've used before. Broadcom serves a lot of different types of customers, and they serve each of them at different levels. At the bottom level, their customers are the hyperscaler cloud companies like AWS, Microsoft Azure, and Google Cloud. Broadcom makes high-performance switches, switches, network interface cards, wireless networking solutions, and ASICs for these companies' data centers. Two examples here, they're helping Meta build their future metaverse chipsets, and Google is using them to help design their AI accelerating TPU chips. The next level Broadcom services is their software level. So most software companies don't know how to write literal machine level code. It would be really slow and really expensive. So Broadcom just acquired a whole slew of companies, and the biggest one, VMware, is helping developers build software that runs on their hardware. This virtualization layer is a huge business in its own right, since it allows developers to write applications that can easily be deployed anywhere in the world or even pool power from multiple machines, which is pretty necessary given how global the cloud workforce is today. VMware is by far the biggest player here at nearly 45% of the market. And then you have Broadcom's third layer, which is the applications and services. These products range from their semantic products in cybersecurity, which is one of the fastest growing industries on earth, or just tools to help application developers get more done. This is sort of a quiet, in the shadows type of company compared to a high flyer like Nvidia, but they're a solid stock that could join the multi-trillion-dollar club within a few years, especially given the Pelosi's apparent expertise in this area. But Nancy Pelosi is far from the top performing investor in Congress. So let's now go straight to the very top of the best performing investors of the past year. Well, kind of. See, the actual top return was for this guy, Brian, who made a ridiculous 238% return. But when you look into it deeper, he just YOLO'd $15,000 into Nvidia Wall Street bet style, and that basically made up his entire portfolio. So for him riding Nvidia to the moon, I'd just say, fair enough. But this guy right below him, Mark Greene, is a serious player. He's up 122% in the past year, and this was not a one-time thing. Greene has historically been one of the biggest stock traders in Congress, and he's been on a bit of a selling spree recently, but he has said that he believes using insider information for personal benefit is a crime. And he shared with the public a letter that he gave to his stockbroker to do all the trading for him, and for his broker to file all reports required by the Stock Act, a law that was supposed to stop insider trading by Congress. The only issue, Greene was later reported to have potential conflicts of interest, since he held stocks in companies that he was responsible for regulating as part of his seats on various committees. And he was found to have violated the Stock Act for not disclosing his trades when he should have. So Mark Greene has an estimated net worth of $80 million, and he's traded just shy of $100 million worth of stocks. So let's cover the top stock that he is buying into, and then I'll show the list of the top 10 stocks across all of Congress. So Greene sold some shares in the energy sector, especially in NGL Energy Partners, but despite some sales, he still holds a substantial position in the company Energy Transfer, ticker symbol ET. So Energy Transfer is an energy infrastructure company. So when it comes to oil and gas, there's basically three levels. You have upstream, where you're searching for and extracting new natural resources like oil or natural gas. You have midstream, which is mainly focused on the transportation and storage of those raw resources. And you have downstream, where you refine those raw resources into things like gasoline and petrochemicals. So Energy Transfer operates in the midstream section. It's a company that owns and operates pipelines and infrastructure to transport oil, natural gas, and other energy products across the United States. Think of it like a highway system, only instead of carrying cars, it's carrying energy. So why would you invest in a midstream company? Well, some advantages are it gets you exposure to the energy and oil and gas industry without the direct exposure to some of the geopolitics that you might run into if you're competing on, say, gasoline prices with Russia. Greene's timing in the stock so far has been pretty good, with the stock price up just over 20% over the past year and a current market cap of $54 billion. The company has a fairly healthy dividend of 8%, their PE ratio makes them relatively cheap, and their price to book value puts them right in the middle of the market in terms of valuation. So Mark Greene does sit on the Homeland Security Committee as well as the Foreign Affairs Committee, and in the past, he's been a supporter of American energy independence, which makes sense. His investments are kind of following the same ways that he votes. Is he investing because he has the inside track, or just because he invests a lot in the energy sector in general? Hard to say. But here are the 10 most popular stocks across all of Congress right now. And if you trust YouTube's AI more than your local congressperson, YouTube really thinks that you'll enjoy this video next.